I had two MSTY puts that were going to expire today, and I want to show you what I did. Hello my friends, this is Legend. I just wanted to do a video on MSTY. I had two puts open that were to expire today. I want to show you what I did for each one. So here we are on the Webull chart. Today being February the 21st. As you can see, we had a pretty big red day today. And that price, it came out starting at $25.18 and it fell down to $23.27. But of course, if you saw anything in the market today, that's not really surprising because a lot of stocks fell today. So it was a good time to get into some stocks, buy into some things, sell some puts, or whatever you wanted to do today. It was definitely a good buy day, in my opinion, and that's my opinion alone, because I see overall the market continually to go up. So let's just look at MSTY here. And before we get too far into it, don't forget to like, subscribe, and share. That helps my channel out, and it's much appreciated. So as you can see here, MSTY fell. As I said, it came out and opened at $25.18. It got as high as $25.20, so not much above the open, and then fell. It got as low as $23.23 and of course closed at $23.27. So it pretty much closed on the bottom end of that candle. As you can see here, we did break below that Bollinger Band, so we're just below it. And you can see that RSI here. It is getting really close to that 10, but it did end up closing today at 11.8 on the RSI2, so it's really close to that 10. Now, due to the fact that the market and a lot of other stocks fell today, MSTY was no exception. It did fall as well. Now, I wanted to kind of show you a little bit of what that chart looked like, because the next I'm going to show you my spreadsheet and show you where I had my puts. Okay, so here we are on my spreadsheet for MSTY. It is exactly where we left off before. This is the same sheet as you've seen on my previous video. It has the current price up here. As you can see, it's $23.27. I have a total of 376 shares with an average price of $25.42 and a adjusted share price of $10, which puts me at about 60.66% of earned money back. It still shows the number of shares that I purchased at the buy prices, and we listed those out last time along with the distributions. All of this will match up as before. Now on this table here, we showed previously the two puts that I had. I had the $25 put and I had a $24 put. The $25 put was opened on February the 7th with an expiration of February the 21st, which is today. And the $24 put was opened on February the 13th and expires February the 21st. Again, both expire today. So I had a choice. I either let them be and they can just go ahead and get assigned, and I would own 100 shares at $25 and another 100 shares at $24. So I wasn't looking to gain 200 shares at roughly about that same price. So what I did was I took the one that was furthest away, the $25 put. Since the price being at $23.27, I decided to try to roll that $25 put. What I mean by rolling it is I am going to buy back that $25 put for a cost and then write another put at a different date, right? A different expiration date. In this case, I wrote it for March the 14th I moved that expiration date out 1 month, and I took that strike price, originally was $25, and I rolled it down to $23.50. Now, what this means is I have now moved that contract out and down. That original contract was $25 that expired on 2/21 today. Instead, now I have taken it and I took it down to $23.50 and moved that expiration out to March the 14th. So basically what it did for me is that put $1.50, and of course each contract is 100 shares. So that in essence put $150 back into my cash account, right? Because the $23 from the 25 gave me the $150 back, $1.50 times 100. So that put that cash back into my account, and that means that now if the current price hits that $23.50 by March or on March the 14th, then I could get put those shares at that point. But what I'm looking for is that price to go back up, and then therefore this just to expire worthless. So that's what I did for the $25 put. Now for the $24 put, also expired today. But what I thought about doing here is going ahead and letting it get assigned at that $24, because the current price being at $23.27 and buying those shares at $24, that's really close to that price. And I did earn $200 or $2 per share for selling that contract. So in essence, you could say that 24 break even is actually $22 for a break even. But I'm not looking to break even on this. I'm just looking to get shares at a good, decent price. So I have let the $24 put get assigned. So since it is below the $24, it is very most likely I will be assigned those shares at $24. Now, I will not actually see that happen until Monday in my account. That is when the shares will be assigned to me at $24. And the amount of money that was held, being $2,400, will be taken out of my account at that point to pay for those shares. But for rolling this 25 to 23.50, I did earn a total here of $25. Now that $25 minus my transaction fee of 14 cents would give me a total of equals 25 minus 0.14. So therefore, that's $24.86 that I earned for rolling that put. Now, you can see that and you're thinking, well, 25 bucks, that's not very much to do a roll. And it's not. But I have lowered my buy price here from 25 down to 23.50. And if I can get those shares at 23.50, that's even better. And then next month, if I get a chance, and if it's down further, then I might get a chance to roll it down even further than that until it gets to the point where I feel like that's a good price, and then I can let it get assigned at that point. So just for this video here, I have not got assigned those 100 shares yet, but I will most likely get assigned those shares because the current price is below the $24. So let's just go ahead and enter this in so that we can update our percent earned up here and everything else, because this will lower and the adjusted price will also go up slightly, because that $25 did take it down from $10 adjusted price down to a $9.93. But that will go up when I add in those 100 shares for this put that got assigned, or that will get assigned. So let's just go ahead and enter that in here. And if it does not get assigned for some reason, because the buyer has the right but not the obligation to assign me those shares. And basically what that means is he doesn't have to. They don't have to assign it to me, but it's probably going to happen, right? It's probably going to happen. I have had it on a call that I sold where if I had a $20 call and the price actually went to $20 and say 5 cents. So you're looking at it and you're thinking, oh, you know, I'm going to get assigned, those shares are going to be taken away from me because it is selling a call, right? So my shares would be taken away. But it actually did not. It did not get taken away. I still kept the shares. I was hoping to get the shares taken because I would like to have sold it for that price. And that's just an example that I've ran into one time. And that's the reason I said I am taking the assumption that I'm going to get assigned those shares, but until it actually happens in my account, it's not guaranteed, right? But for now, I'm going to go ahead and enter those in because I will probably get assigned those shares. So $24 is my buy price because that's the put contract that I had, and that will get me 100 shares. So that's a total of $2,400 here of the capital spent, and that did lower my percentage earned, and that's just simply because now I have more shares and I have not earned a distribution off of those shares yet. Now once I earn that distribution, now I actually will have a total of 476 shares that will earn that distribution. So that will offset it, and that will help to increase this percent earned. And I hope to see it go up above where it originally was before we entered that 100 shares. So it'd be nice to see if it goes up above that 60%. But we will see what that distribution pays out on the next round. So I just kind of wanted to show you where I had 2 puts that were expiring. One of them I let get assigned because I liked it at the $24. And the $25 put, I actually used a technique called the rolling the put. So I actually rolled that put down in price so that I am on the hook for less money, right? And I rolled that expiration date out. So a lot of times when you're trying to roll a put and you still want a credit, you'll try to roll it down and out. Out in expiration and down in price. It's just one of the ways that you can try to stay on the put side. And I could have done it with the $24 put as well. I could have done it with that, but I liked it at the 24, so I let that one get assigned and decided just to roll that 25 down. Just to extend that out and make a couple bucks off of it. But I was looking and hoping that that price can continue to go back up, and if not, I might be able to roll it down even further. But we'll see once that time comes. So anyway, I think I'm going to wrap it up right there. Really just kind of wanted to show the expirations of those puts that were happening today, just so that you can see what happens and how you can manage those options. So don't forget to like, subscribe, and share this video. Be much appreciated. As always, I am not a financial advisor. This is not financial advice. Please do your own due diligence before you get into any stock plays. And until next time, legend out.